Assalamualaikum warahmatullahi wabarakatuh and good day everyone. We are the group 7 and our topic is audit reporting, special purpose engagement and other audit related services. So the learning objectives at the end of this module, you should be able to understand the procedures and reports and special audit engagement. So by the end of this session, you should understand the procedures and reports required for a special audit engagements. So particularly, mine is focusing on audit of financial statement prepared in accordance with the special purpose framework, the PSA 800 Special Consideration Audit of Financial Statement prepared in accordance with the special purpose frameworks deals with a special consideration in the application of PSA to an audit of financial statement prepared in accordance with the special purpose framework. So the special purpose frameworks are accounting frameworks designed to meet specific needs. They differ from the general purpose framework like IFRS or GAAP because they are tailored for a specific user or a circumstances. PSA 800 provides guidance on the unique considerations and challenges auditors face when auditing financial statements prepared using these frameworks. So these are the examples of special frameworks. So first bullet is a tax basis of accounting for a set of financial statements that accompany an entity's tax return. The cash receipts and disbursement basis of accounting for a cash flow information that the entity may be requested to prepare for creditors. The third bullet, the financial reporting provisions established by a regulatory to meet the requirements of the regulator. Lastly, bullet is the financial reporting provision of a contract such as a bond indenture, a loan agreement, or a project grant. So before that, let's explain each bullet. So the first bullet is a tax basis of accounting for a set of financial statements that accompany an entity's tax return. The primary focus is compliance with the tax laws and regulations. So the second bullet is the cash receipts and disbursement basis of accounting for cash flow information that an entity may be requested to prepare for creditors. So the second bullet is the cash basis of accounting. It is a financial statement that prepared based solely on the cash receipts and disbursements. This framework is often used when creditors and other stakeholders request cash flow information. The third bullet is the financial reporting provision established by a regulator to meet the requirements of the regulator. So it is a regulatory framework. So these are the frameworks established by regulators. So the financial statement is prepared under this framework are designed to meet a specific requirements mandated by the regulatory bodies. Lastly bullet is the financial reporting provision of a contract such as a bond indenture, a loan agreement, or a project grant. So it is a contractual framework. These arise from a specific contract such as bond indenture. It is to ensure the compliance with the bond terms. Also a loan agreement. It is to monitor the loan covenants. Lastly, the project grant. It is to report the compliance with the grant provision. So we have a special consideration for auditors. So first is the understand the framework, modify audit procedure, and third is to prepare the auditor report. So the special consideration for auditors and when auditing financial statement under special purpose framework, the auditor needs these three. First is to understand the framework. It is to assess whether the chosen framework is appropriate for the entity purpose and users. Second is the modify audit procedure. It is the tailored audit procedure to ensure that the financial statement comply with the specific framework requirements. Lastly, the third is the prepare the auditor report. It is clearly stated in the report that the audit was conducted in accordance with the special purpose framework, and it is highlighted in any differences from a general purpose framework. So let's proceed in the importance of the special purpose framework. So these frameworks help the entities meet unique report needs such as regulatory compliance or fulfilling specific contractual obligation. So they ensure that the transparency and accuracy of the financial reporting tailored to a specific stakeholders. So, in a conclusion, in summary, the special purpose audit engagements required auditors to adapt their approach to meet the unique requirements of a choosing framework. PSA 800 serve as a guide to ensure that these audits are conducted effectively and in a compliance with the auditing standard. That's all my part. Thank you for your attention. By the way, my name is Ana Customer Gumaga Hajikasan, the first reporter.
I am Sandori Bauti Karis and I'm going to report the requirements of audits of financial statements prepared in accordance with special purpose framework. The following general consideration and principles should be observed. The auditor should determine the acceptability of the financial reporting framework applied in the preparation of the financial statements. In an audit of financial purpose financial statement, the auditor shall obtain an understanding of the purpose for which the financial statements are prepared. This, the auditor need to understand the reason behind their creation. And next, the intended user. And the intended user matter because it influences what information should be included and how it's presented. And next, the steps taken by management to determine that the applicable financial reporting framework is acceptable in the circumstances. Dito, paano nagde-decide ang company which accounting rules to follow when making these statements? The auditor needs to see that the company followed a reasonable process to ensure that the financial statements are reliable and appropriate for their user. The auditor is making sure that the financial statements are relevant, reliable, and citable. Relevant, they provide the right information for their intended purpose. Reliable, they are prepared using appropriate accounting method, and the citable, they are fit for the needs of the people who will be using them. The next bullet is in planning and performing an audit of special purpose financial statements. The auditor shall determine whether application of the PSAs requires special consideration in the circumstances of the engagement. This means that when planning and conducting an audit of special purpose financial statements, the auditor must carefully consider whether the standard auditing procedures, PSAs, professional standards on auditing need any adjustments or special attention due to the unique aspect of the specific audit. For example, maaaring tutukan ang ilang bahagi ng financial statement kaysa iba o gumamit ng ibang pamamaraan sa pag-test ng bagong method. The auditor is required to obtain understanding of the entity's selection and application of accounting policies. In the case of financial statements prepared in accordance with the provision of a contract, the auditor shall obtain an understanding of any significant interpretations of the contract that management made in the preparation of those financial statements. An interpretation is significant when adoption of another reasonable interpretation would have produced a material difference in the information presented in the financial statement. The auditor is making sure that the company is using the right accounting rules and that they are interpreting any relevant contracts in a way that is accurate and consistent with the rules. The auditor wants to be sure that any differences in interpretations would not mislead users of the financial statement. When forming an opinion and reporting on special purpose financial statements, the auditor shall apply the requirements in PSA 700. This statement means that when an auditor is forming an opinion and writing a report on special purpose financial statements, they must follow the guidelines outlined in PSA 700. This is a very important standard that guides auditor on how to express their opinion about the financial statements and how to communicate their findings to users. In essence, the statement is saying that even though the financial statements are for a special purpose, the auditor still needs to follow the same rigorous standards for forming an opinion and reporting their findings as they would for general purpose financial statement. This ensures that the auditor's opinion is credible and that users can trust the information presented in the financial statement. Next is PSA 790. Requires the auditor to evaluate whether financial reporting statements adequately refers to or decide the applicable financial reporting framework. In the case of financial statement prepared in accordance with the provisions of a contract, the auditor shall evaluate whether the financial statements adequately describe any significant interpretation of the contract on which the financial statements are based. This statement, the auditor is making sure that the financial statements are transparent and provide enough information for users to understand how the company applied accounting rules and interpreted any relevant contracts. The auditor wants to ensure that the information presented is clear, accurate, and not misleading. And the last requirements in audits of financial statements prepared in accordance with special purpose framework. The auditor report on special purpose financial statement should the auditor's report shall also describe the purpose of which the financial statements are prepared and, if necessary, the intended users, or refers to a note in the special purpose of financial statement that contains that information. This statement talks about the purpose and the user. The report must state why these financial statements were created and who they are for. This information might be directly in the auditor's report or it might point to a note within the financial statement themselves that explain this. If management has a shook of financial reporting framework in the preparation of such financial statement, the explanation of management's responsibility for the financial statement shall also make reference to its responsibility for determining that the applicable financial reporting framework is acceptable in the circumstances. This statement is if the company preparing the statement had a choice of accounting rules to follow. The report must say that management is responsible for choosing the right rules for this specific situation. This is important because different rules might be suitable for different purposes. The auditor's report on special purpose financial statement shall include an emphasis of matter paragraph alerting users of the auditor's report that the financial statement are prepared in accordance with the special purpose framework and that as a result, The financial statement may not be suitable for another purpose. The auditor shall include this paragraph and appropriate heading. This statement talks about the report needs a special section, an emphasis of matter paragraph that clearly warns readers. These statements were made using special rules, not the usual one. This means they might not be useful for anything else. It's a big don't use this for anything other than what it was intended for. Warning. The auditor's report on a special purpose financial statement needs to be very clear about the report's purpose, who it's for, and a strong warning that it's not suitable for other uses. This is because these reports are tailored to a specific need and using them for other purposes could be misleading.
Welcome to this presentation on PSA 805, which stands for Philippine Standards on Auditing 805. Today, we'll discuss how this standard applies to audits focused on single financial statements or specific elements of financial information. The goal of this video is to understand the unique requirements and practical applications of PSA 805 in such specialized audits. So, let's go. So, what is PSA 805? PSA 805 is standard designed specifically for auditing single financial statements or individual elements of financial information. Example, imbis na ang buong financial statements ang i-audit, isang account lang tulad ng accounts receivable ang focus. It also addresses the challenges auditors face when applying other PSA standards in these specialized audits. PSA 805 is applicable whether the audit is under a general purpose framework like PFRS or a special purpose framework. We have different examples of audits under PSA 805. The first one is accounts receivable and allowance for doubtful accounts. The second one is inventory, including valuation and existence. The third one is liabilities such as accrued benefits o yung mga claim na na-incurred pero hindi pa nare-report. The fourth one is intangible assets like goodwill or patents. And lastly, schedules such as externally managed assets or profit participation statements. We also have different requirements under PSA 805. The first requirement is auditors are required to comply with all relevant PSAs during their engagement. Like for instance, kahit na ino-audit na nila yung buong financial statements ng isang company, they must separately ensure compliance when auditing individual elements. If the auditor is not engaged for the full financial statements, they must assess whether it's possible to perform a high-quality audit under the standards. One of the most important thing in audit process is evaluating the acceptability of the financial reporting framework being used. The auditor must ensure that the framework includes adequate disclosures for the intended users. Example, if the framework does not properly reflect material transactions or events, possible na magdulot yon ng incomplete or misleading reports. Audit engagement terms are critical and must be agreed upon early in the process. Like for example, yung form and yung content ng isang auditor's report is kailangang maayos or clearly defined based sa PSA 210. The auditor must also ensure that the type of opinion they expect to issue, such as unmodified or qualified, is appropriate for the engagement. PSA 200 reminds auditors to adopt the general principles of auditing when dealing with specific financial information. When auditing a single financial statement or specific elements, the auditor must adopt the requirements of relevant PSAs to fit the engagement's circumstances. For example, auditing inventory will involve different risks and procedures than auditing liabilities. Iba yung mga risk na kasama sa pag-audit ng inventory compare sa liabilities, kaya it requires careful planning, including identifying risk specific to the element and tailoring the audit approach accordingly. The nature of the financial information being audited will heavily influence the auditor's decision.
So, Assalamualaikum. My name is Ashadia Isminandang. So, I'm gonna continue the discussion and the requirements bullet 5. So, when forming an opinion and reporting on a single financial statement or on a specific element of a financial statement, the auditor shall apply the requirements in PSA 700, adapted as necessary in the circumstances of the engagement. This statement is saying that when an auditor is looking at just one part of a company's financial statements, like the balance sheet or a specific account, they still need to follow the main rules for auditing financial statements, which are found in page A700. Think of it like this. Imagine you're a teacher grading a student's essay. You have a general rubric for grading essays, but if a student only writes one paragraph, you might adjust the rubric a bit to focus on the quality of that single paragraph. Similarly, when an auditor is looking at a single financial statement or a specific element, they still need to make sure it's accurate and follows the rules, but they might focus on specific details of that one part instead of looking at the whole at the whole picture. So the next one is, if the auditor undertake an engagement and report on a single financial statement or on a specific element of financial statement in conjunction with an engagement to audit the entity's complete set of financial statements, the auditor shall express a separate opinion for each engagement. This means that if an auditor is checking a single part of a company's financial statements, like just the income statement, along with checking the entire set of financial statements, they need to give separate opinions on each. So the auditor needs to be clear about what they are checking and what they are saying about each part of the company's financial statement. So in the next slide, if the opinion in the auditor's report on the entity's complete set of financial statements is modified, or that report includes an emphasis of matter paragraph or another matter paragraph, the auditor shall determine the effect that this may have on the auditor's report on a single financial statement or on specific element of a financial statement. When deemed appropriate, the auditor shall modify the opinion on the single financial statement or in specific element of a financial statement, or include an emphasis of matter paragraph or an other matter paragraph in the auditor's report accordingly. So this statement is saying that if an auditor finds something wrong with the overall financial statements of a company, they need to consider how that affect any individual parts of those statements they also check. So if the auditor finds problems with the overall financial statements, they need to look at any individual's parts they've checked and see if those parts are also affected. If they are, the auditor might need to modify their opinion on the individual part. This means they might not be able to say the individual part is accurate or reliable, and they also need to include an emphasis of matter or other matter paragraph. This would highlight the problem with the individual part even if it doesn't change the overall opinion on that part. So, in simple words, if the auditor finds a problem with the whole cake, they need to check if any of the slices are also bad. If they are, they need to tell you about it. So, in the next slide, if the auditor concludes that it is necessary to express an adverse opinion or disclaim an opinion on the entity's complete set of financial statements as a whole, PSA 705 does not permit the auditor to include in the same auditor's report an unmodified opinion on a single financial statement. that forms part of those financial statements or on a specific element that forms part of those financial statements. This is because such an unmodified opinion would contradict the adverse opinion on the entity's complete set of financial statement as a whole. So, imagine you're baking a cake and you find that the entire cake is burnt. So you wouldn't say that this cake is burned, but this one slice is perfectly fine. That would make sense, right? So this is similar to what this statement is saying about the financial statements. So if the auditor finds that the entire set of financial statement is seriously wrong, they need to give an adverse opinion or say they can't give an opinion at all. They can't uh, they can't then say that one specific part of those statements is perfectly fine. It's like saying the whole cake is bad but one slice is good. It just doesn't make sense because the bad parts are affecting the whole thing. So the auditor has to be consistent. If the overall financial picture is bad, they can say that a single part is good. It would be misleading to the people reading the financial statement. So, in the next slide, if the auditor concludes that it is necessary to express an adverse opinion or disclaim an opinion on the entity's complete set of financial statements as a whole, but in the context of a separate audit of a specific element that is included in those financial statements, the auditor nevertheless consider it appropriate to express an unmodified opinion on that element. The auditor should do so if letter A, the auditor is not prohibited by law or regulation from doing so. Second one is that opinion is expressed in an auditor's report that is not published together with the auditor's report containing the adverse opinion or disclaimer of opinion. And the last one is the specific element does not constitute a major portion of the entity's complete set of financial statements. So this is a complex situation involving an auditor's opinion on a company's financial statements. Imagine a company's financial statements are like a big puzzle. The auditor finds that the whole puzzle is missing pieces and doesn't make sense. However, the auditor also looked at a specific piece of the puzzle, a specific element, and found that it is complete incorrect. The auditor can give an unmodified opinion on that specific piece if no legal or regulatory restrictions, there are no law or rules stopping the auditor from giving a separate opinion. And uh, the the second one is to the separate reports. The opinion on the specific piece is given in a separate report, not alongside the report saying the whole puzzle is bad. And the last one is not a major part. The specific piece is not a big part of the whole puzzle, meaning it doesn't represent a significant portion of the company's financial statements. So, if the auditor finds the whole financial picture is messed up, but a specific part is okay, they can say that part is okay only if they are allowed to. If they give a separate report, and if that part is in a huge part of the whole picture. This is to avoid confusion and ensure the auditor's opinions are consistent and not misleading. So, the last slide is the auditor shall not express an unmodified opinion on a single financial statement of a complete set of financial statements if the auditor has expressed an adverse opinion or disclaimed an opinion on the complete set of financial statements as a whole. This is the case even if the auditor's report on the single financial statement is not published together with the auditor's report containing the adverse opinion or disclaimer of opinion. This is because a single financial statement is deemed to constitute a major portion of those financial statements. So, this statement is saying that if an auditor finds that the entire set of financial statements for a company is seriously wrong, they can give an adverse opinion or say they can't give an opinion at all. They can then say that one specific part of those statements is perfectly fine, even if they reporting on that part separately. So think of it like this, like the whole set of financial statements is like a house. The auditor finds the house is unsafe and needs major repairs. One specific financial statement is like a room in the house. The auditors can say that the room is perfectly fine even if they're just looking at that room. So this is because the problems with the house, the overall financial statements are likely affecting the room. The single financial statement as well, it would be misleading to say that the room is fine when the rest of the house is in bad shape. The auditors needs to be consistent. If the whole picture is bad, they can say a single part is good even if they're reporting on that part separately.
So PSA 810, engagement to report on the summary financial statement, deal with audit the responsibility when undertake an engagement to report on summary financial statement is derived from financial statement audited in accordance with PSA by the same auditor. So PS 810 is to provide the guidance to auditor when you're reporting on summary. Financial statement, these statements are to condensed version of an entity finance, providing a snapshot of its economic resources or change over period, so the auditor is subject or to accept the engagement form of opinion on the summary financial statement and express that opinion in a written report. So engagement acceptance. The audit of the financial statement is from which of the summary financial statement are derived by the auditor with necessary knowledge to discharge the auditor responsibilities in relation to a summary financial statement. In accordance with this PSA, application of this PSA, we will not provide the sufficient appropriate evidence on which to base on opinion on the summary financial statement. If the auditor has not also audited, so the financial statement is from which of the summary financial statement are derived. So the engagement acceptance, before accepting the auditor must ensure they have audited the financial statement from which of the summary statement are derived. They also evaluated the applied criteria for the preparing the summary finance and consider the factor like the nature of the entity and the need of the intended user. The nature of procedure. The auditor is evaluate whether the summary financial are properly disclosed and agree with the audited financial. They also check if the summary is financial are prepared according to applied criteria and provide the sufficient information without being misleading. Form of opinion. When you express an unmodified opinion, the audit or can use a specific to indicate the consistency or the fair summary of the audited financial.
Assalamualaikum warahmatullahi ta'ala wabarakatuh. So I am Samiha M. Rahman and I will be reporting the timing of work and events subsequent to the date of auditor's report on the audited financial statements. So the procedure described in paragraph 8 of page 810 are often performed during or immediately after the audit of the financial statements. So, when the auditors report on the summary financial statements after the completion of the audit of financial statements, the auditor is not required to obtain additional audit evidence on the audited financial statements. Since the summary financial statements are derived from the audited financial statements and do not update them, this explains that the procedure are usually carried out during or immediately after the main audit of a company financial statement. So, the key point is about the summary of financial statements. So, if an auditor also prepares a report on summary financial statements, they don't need to gather extra audit evidence. Why? Because the summary statements are simply derived from the already audited full financial statements. So they don't add any new information or change the underlying data. So the audit of the full statements covers the summary statements by the implication. So for example is that imagine a company completes its annual audit. So the auditor reviews all the financial records and the issues a report. So the company then requests a summary version of these statements for a board meeting. So the auditor can simply create the summary from the already audited data and doesn't need to perform additional procedures. Let's proceed to the auditor's report on summary financial statements. So we have element of the auditor's report. So we have first the title. So the title indicating the report is the report of an independent auditor. For example, is yung the report of the independent auditor affirms that the auditor has met all the relevant ethical requirements regarding independence. This distinguish that the report of the independent auditor from reports issued by the others. So, for example, is that yung sinasabi natin na the report of the independent auditor. So, this is very clear, concise, leaves no doubt about the report's nature and the company it pretends to. So, a title like financial summary will be insufficient because it lacks the crucial independent auditor designation. So we have address. This factor that may affect the auditor's evaluation of the appropriateness of the address of the summary financial statements. This includes in the term of the engagement. So the nature of the entity and the purpose of the summary financial statements. So for example is the if the summary is intended for the company's board directors, the address will be to the board of directors of XYZ company. So the auditor will consider the board's understanding of financial matters when deciding the level of detail in the summary. So we have comparatives if the audit financial statements contain comparatives. So there is a presumption that the summary financial statements also would contain comparatives. So comparatives in the audited financial statements may be regarded as the corresponding figure or as a comparative financial information. So according to the PSA 710, it describes how this difference affects the auditor's report on the financial statements, including in particular two other auditors who audited the financial statements for the prior period. So for example is let's say that the full audited financial statements show the revenue for 2024 as 10 million and the revenue for 2023 as 8 million. So the summary of financial statements should also include both figures to show the year-over-year trends. So this allows for easy comparison and trend analysis. So the PSA 710 would guide how to present this comparative information in the auditor's reports, so addressing any difference or limitation. So the circumstances that may affect the auditor's determination whether an omission of a comparative is reasonable, the nature and objective of the summary financial statements that applied the criteria. Summary, this provides a framework for an auditor's report on summary financial statements. So it highlights the importance of clarity in the title, careful consideration of the recipient, and the consistent of handling comparative financial data according to established professional standards. So the goal is to ensure the summary report is accurate, reliable, and relevant to its intended audience. Thank you for watching and listening.